Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of GBPUSD, British Pound, US Dollar. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis. And do not forget to check out the Forex analysis playlist for the analysis of other currency pairs. So let's get started. So this is the 4 hours chart of GBPUSD, British Pound, US Dollar, my favorite 4 hours time frame. As we all know, there was heavy sell-off in currency pairs like British Pound, US Dollar, Euro, USD. And after the market opening on Monday, the good news is that bulls are trying to hold the present market position. After the market opening, price did not go down. Rather, bulls are trying their best to hold the present position. As we all know, after the huge sell-off, almost all the important support levels are gone. And we can see that right now market is trying to bounce from this particular level. And if we compare the chart of Euro USD and GBP USD, then we can see and we can observe that the condition of GBP USD is better because bulls are trying their best to take the price upward. And if I zoom out the chart, we can see that there was a small support here which market respected when market was falling in the previous week, and market is just standing at the support. No, market was standing at the support, and from this particular small support, yes, small support, but from small support only market tried to bounce. And apart from this level, we have another support here in the form of 1.3680 level. Let me mark these levels. This is the first one and this is the second one. Okay. So this is the support 1 as of now, and this is the support 2. And the best thing about this chart is that at least we have got support here. In Euro USD we do not have any proper support right now. So we can see that market is trying to bounce from this particular support level. And as we all know, to consider a trend reversal in a downtrend market, we need a V formation. And we can see that right now market is trying its best to form the V formation. So we can consider this as a trend reversal, or still we can see that bulls are trying their best to go for a trend reversal. And this is the currency strength meter, and as we all know, dollar is standing tall because we have already seen in the chart of US dollar DXY where we have seen the bullishness and the bullish power of the US dollar, and the US dollar will be standing tall. US dollar will remain strong for next couple of days because the chart is very bullish. And if we compare US dollar and GBP, then we can see that yes, US dollar is very strong, but GBP is also strong in comparison to Australian dollar or Swiss franc. Therefore, the condition of GBP or British pound is also not that bad. And in this kind of a scenario, generally whenever we get two currencies of equal strength, almost equal strength, we get sideways market. We do not get a trending market, remember. Whenever we get two currencies of the equal strength or almost equal strength, we get a sideways market. And for a trending market, one currency needs to be very strong and one currency needs to be very weak. Just like previous week, dollar was very strong, pound became very weak. As a result, market fell. Let's assume dollar becomes very small. Dollar became weak and pound becomes very strong. Then we will get an uptrend market. Okay, but right now, considering the present standing of the currencies, it looks like that yes, British pound US dollar will not go down that easily. Rather, there is a possibility that market will hold the present level and market will remain sideways. And as we all know, whenever we get a huge volatility in the market, just like previous week, market tries to remain sideways or market goes into sideways zone or market tries to cool off. Because see, whenever market sees some huge volatility, market needs to take risk. And there is a theory in the market, whether it is forex market, stock market, doesn't matter. There is a theory: volatility always moves from high to low. If a market is very volatile, let's assume a market is very volatile right now, and after some time market will take some risk, market, the volatility will reduce. And if a market is very flat right now, then there is a possibility that volatility will come, market will take a huge jump. And following the previous week's huge volatility, then there is a possibility that market will remain sideways, or there will not be much movement in the market for 1 or 2 days at least, because market will take rest, market needs to take rest. uh let's check the 1 week time frame. Weekly time frame once. See, the weekly time frame also we can see that market fell to the support on the weekly zone. After that market did not go down, rather market respected. You can see that on the weekly chart clearly, market respected the weekly support. And right now we can see that market has formed a small green candle on the weekly chart. Then this is a very good sign. There's a very good sign, which means that the black line which I have marked as support 1, let me show you again, which means that this black line has got importance, because this black line is a support from the weekly chart. Therefore this black line is important, and there is a good possibility that market may reverse from here. But one thing I would like to show you here, and you can see that this is a Fibonacci retracement. I have drawn Fibonacci retracement, and see, this level is very important. This is a retracement level, and right now market is just standing at a retracement level. Yes, we need a V pattern, but still we cannot be too sure whether it is a trend reversal. Therefore be very careful, and there is a possibility that market may reverse also. Yes, being a technical analyst, we need to consider many aspects. Okay, and after a huge sell-off like the previous week, we must be very careful if you are looking for buying opportunities. Therefore, draw a Fibonacci level in your charting platform. If you do not have the Fibonacci level, then just go to tradingview.com. This is a free platform, and draw these levels and just wait for the market to cross this level. If market crosses this particular level on the Fibonacci, then we can consider that yes, at last market has taken the support from the weekly chart and market has bounced. Bulls have the strength to take the market upward. But if market reverses from this particular point, then we will get the um, confirmation that yes, though bulls tried their best to take the price upward, but still it was a retracement, it was just a pullback, and therefore we cannot trade. Okay. If market crosses this level on the Fibonacci, then we can go for a buy order. Otherwise no buying order, because this can be a retracement also. And on the other hand, if market reverses from this particular point, that if you want to short the market, that totally depends on you. In a market like this, I will not trade. Personally, I will not trade. For at least I'll not trade for today. And if you want to trade short the market after the retracement from the Fibonacci level, you can short the market. But keep in mind, if you short the market, this will be your take profit. At this level 1.37996, this will be your take profit, because this level belongs to the weekly chart. And let's see where the market goes and what the market does. Thank you so much. All the best. Take care. See ya tomorrow.